Call this meeting to order. Start with the pledge.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, the first order of business is approval of minutes from November 19th.
Second.
Okay, got a motion and a second. All those in favor signify by saying aye.
Aye.
All opposed, same sign. Motion carries. Oh, roll call. I always forget the roll call. Vicki?
Thank you. Commissioner Blaney,
Present.
Commissioner Good,
Here.
Commissioner Vitt,
Here.
Council President Rivas,
Here.
Councilmember Graham,
Here.
Councilmember Jessen,
Here.
Councilmember Larson, Councilmember Paparad,
Here.
Councilmember Sims,
Present.
Councilmember Witten, Advisory Board members Matt Destler,
Here.
Mark Ripsey,
Here.
and David Klein.
Here.
Thank you. Roll call is complete.
All right. Now we need to move on to reorganization for the election of officers. Do we have any nominations?
I nominate Commissioner Blaney for Foundation President.
Second.
Appreciate that. All those in favor signify by saying aye.
Aye.
Opposed, same sign. All right. And for Vice President, I nominate Mike Jessen.
Second.
Okay. All those in favor signify by saying aye.
Aye.
All opposed, same sign. Motion carries. All right, a new business, we have a resolution transferring foundation earnings. This is foundation earnings that we have in our holding account that will be transferred to the foundation budget fund. That's exactly what we budgeted, correct?
I'll make the motion. Second. It's in there. Discuss.
Any discussion? Okay, all those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion carries. All right, we've got the Capital Cities presentation. I'm looking forward to some good news, Amanda.
Okay. Good evening, everyone. My name's Amanda Black with Capital Cities, and I'm here to report on the fourth quarter of 2019 to give you your returns for that quarter and also round out 2019 for the calendar year to give you an update there. So I'm going to be referring to the flash report. It's called a flash report because we are meeting a little bit earlier than normal here in our cycle. So we're meeting, normally we would meet about 3 weeks from now. With that said, I know these results are very important to you in the community, so we wanted to make sure to provide the data. We just don't have all of the analytics that we usually put on top of this. That will still be coming. So with that said, without further ado, let's look at this first page. You can see there in the middle of the page that the foundation ended 2019 at a market value of $173,502,471, and that represented a return for the quarter, so just for the fourth quarter of 2019, of 4.1%, bringing the 2019 total return to 15.3%. So really strong year. That's outstanding news for the foundation. But I also want to kind of keep it in perspective that this is not a normal year. We're not suggesting that you can bank on this year in and year out going forward. With that said, we're really happy to see the growth in the portfolio, so 15.3% again for the year. And that brings your since inception return. And what we mean by that is since the foundation started, since it was invested in this new structure with equities and fixed income, it has experienced an average annual return of 7.3%. So on average, 7.3% per year. Now, just to remind you, we're seeing 15% this last year. 2018 was negative 2.9. So you can get to 7.3% on average a lot of different ways. So it's not always a straight line. So I want to manage those expectations. I want to show you a couple other things with performance, but first let me give you an update on where the market value stands today. And this includes the drop-off we saw yesterday in the markets. I think we all are aware of the news and kind of the uncertainty throughout the world, geopolitical events and things like that. With that said, we've still seen growth in your market value since the end of the year. Your market value as of yesterday's close was $174,400,000. $464,545. So we're not seeing a huge return for January, but still positive. So I wanted to be sure to point that out, even with all the volatility we've seen of late. Let's go ahead and look at page 4. I want to just kind of show you more of a comprehensive view of how the foundation has done over time. So what you see on this line chart is the returns from inception. So, going back to early 2016, again, when this portfolio was invested, we've seen returns on a positive slope. Again, that 7.3% average annual return, even though we've seen some peaks and, drop-offs a little bit, but that's ending at a cumulative return of 30.1%. And at the bottom of the page, you can see that that 30.1% corresponds to a $40.6 million gain. Not that all of those gains have been harvested. They're in, some of them are still in the portfolio, but that's what that 30% corresponds to in terms of dollars. So that's kind of a quick recap on performance. Any questions on that?
So I'm trying to wrap my mind around that.
Yeah, great.
Definitely a strong year.
Well, it's been a fantastic 4 years.
Overall.
Yeah.
Last year was a little painful.
The only other thing I have is it's more of a leave-behind piece, but I just want to kind of orient you to what's in that piece so that if you want to dive into it on your own time, you're welcome to. So that's the other document. It's called 2019 Review and 2020 Outlook. So basically, what we do here is just give you some more color with regards to why the markets were behaving the way they did, what that meant for total returns across different asset classes. On page 2, you can see a detailed commentary that we wrote for each quarter. Just a quick takeaway here, when you look at these charts, you can see here that we saw really good returns in the first quarter, kind of mediocre returns through the middle of the year, and we finished the year out strong. And that was really due to some loosening monetary policy that we were seeing across the globe. So as the Fed was cutting rates in the U.S., that was stimulating growth, and central banks across the world were doing the same thing, and that really served risk assets well, and that benefited your portfolio. On page 3, there's a lot of data on this page, but it's kind of a nice resource if you want to just look at what different asset classes were doing across different years. I would just point you to the gray box there for 2019. These are just broad asset classes. You can see how strong the returns were in the equity markets. But again, I just want to be careful and kind of show you the year just to the left of it, 2018, you can see all the red. So we are going to have bumps in the road, but with a long-term strategic allocation, we hope to create a smoother ride for the foundation over time. Page 4, I think, is kind of interesting. There's a lot on this page. I just want to explain what it is. This is a histogram of all the different stock market returns across all the years, going back many, many years. So what you see in the horizontal axis is kind of returns and ranges of returns. So I just want to show you that the 2019 return of the stock market, the S&P 500, was 32%. You can see that that's an outlier. It's on the far right tail of the bell curve, so to speak. But interestingly enough, you can see all the different green years that we plotted. We really have had a solid run since 2008. And again, that kind of bodes well for the timing of this foundation being exposed to equity. Real quick on page 5, we have to touch on yield curves because of the Fed cutting rates. The easiest way to see that is by looking at Treasury yield curves. What those arrows are depicting there are where we were in 2018, that's the green yield curve at the end of 18, to where we are now, the kind of orangish color. You can see that rates fell across the curve, a direct result of Federal Reserve activity. While that means lower returns potentially for fixed income, it has stimulated risk assets a little bit because of the loosening monetary policy that I already mentioned. I'm going to just really breeze past pages 6 and 7. This is where we're looking ahead to what to expect. What we're kind of showing you here is that there are a lot of forces out there that we can't control that will certainly impact markets either to the positive or to the negative. We think central bank activity will continue to affect markets. We've really seen an inflection point here where central banks are no longer tightening money supply and they're loosening, so that could be favorable for returns. Trade negotiations across the globe, specifically with China, are kind of a question mark that we're uncertain about. On page 7, we just note that the political climate and the geopolitical uncertainty, including, things like coronavirus, all these different things, we know they will impact markets, but we just can't exactly predict how. With that said, it's in your shoes, it's a little easier to be a long-term investor. You have to be aware of these things, but you're invested for the long haul. Again, we're trying to smooth that ride over time. But these are just some things you'll probably be hearing from us over the course of the year. And then finally, I want to end on page 8 and just show you what our plan is in terms of Capital City's plan for you as a co-fiduciary. We outline our plan of projects for 2020 and what we intend to do at the different meetings where we'll be in front of you. So our plan is actually to use our May meeting to do an update on your portfolio construction, and that's a good chance to talk about spending and different things like that. In August, we'll do a comprehensive fee analysis of all the fees to ensure you're paying fairly and avoiding conflicts of interest. In November, we always update your investment policy statement as needed, and then that will bring us back to a whole other year. So this is our plan. We're always open to feedback, but we wanted to at least put this in front of you today. I'll cease fire and see if there are any questions.
Nothing but great news.
Yeah, it's all great news. I think it's important to note that without foundation legislation, we wouldn't have been able to take advantage of the equity market. We would have made so much less money. It's a good thing we got our act together and made this happen.
I have a question just about it, probably more about your process internally.
Sure.
But how does this forward-looking information that you've given us for 2020, how does that inform whether you underweight or overweight a certain sector? Are you making those tactical allocations?
No. Good question. The question is whether or not Capital Cities is recommending tactical changes to the asset allocation. The short answer is no. We serve as your co-fiduciary. The time horizon is into perpetuity, so it is our philosophical belief that if we were to try to time the market on a short-term basis, we'd be wrong as much as we're right, and we take this group through a lot of iterations along the way that are probably not necessary. So what we do instead is we've ensured that a strong or pretty big piece of your portfolio is being invested by active investment managers, and they have the latitude to slightly choose, should I invest in this stock or this stock? Should I invest in, larger cap stocks or smaller cap stocks? Should I invest in corporate bonds or government bonds? So you do have some active managers who are making those tactical decisions, and they're in the markets every day, whereas we're kind of sitting back with you more as a co-fiduciary looking at the long haul.
Do you have any downside protection or any sort of safeguards built into your process?
Well, I mean, by virtue of you having 60% of your portfolio in equity, fixed income, you have 60% in fixed income. That's considerably more conservative than the typical foundation. So you're already less exposed to the equity market. And so when we think of downside risk protection, we usually think of how do we protect against a downside of the equity markets. So fixed income is the logical place to do that. Now, fixed income isn't without its own set of problems with the interest rate environment that we're in. So you've got 60% of your portfolio in fixed income and cash, and it's very diversified across different styles. So that would be the downside protection I would point to.
Any other questions? Comments? Okay. So we should set a May meeting while you're here.
Yes, definitely. And we'll follow up with the full report that we would normally send in February, but we'll just email that out.
Great.
And then plan to meet in May.
When's your May meeting? Is it the 26th? Council?
Very good.
Does that work for you guys? It's the day after Memorial Day. Is that okay?
Here anyway.
Yeah.
Yeah.
Didn't know if anybody would be out of town.
I would make the recommendation too, that we may want the meeting to start a half hour earlier,
Right.
because I think we're gonna have a little bit of work to do here, and it may take more than just 30 minutes, because this is gonna be the portfolio discussion. So I would just make sure we allot ourselves enough time, unless you don't wanna, if you don't mind running into the council meeting or whatever.
I think that's a
Stay
good
late or
point.
start early.
4:30?
Mhm.
Yeah, I was just thinking a half hour.
Jeff, can you make it here at 4:30?
You're asking the wrong guy.
What?
Your job.
I don't believe it.
4:30 work for you?
Yeah, that would be great.
All right.
I think that's a good
I
idea.
just
So
wanna
we'll
have a
set
little
it-
extra time so we don't feel
It's
rushed.
all right, I'll make arrangements to try and get here.
All right, we'll make it May 26th at
I'm not gonna
4:30.
hold everybody else up.
No. I don't think so, let me check. That's if I got voted right. I think I do.
Anyone have anything else for Amanda?
Everybody happy?
Okay,
Amanda.
thank you, I appreciate your time. Thank you very much.
Safe travels.
Thank you.
Okay, we have the attorney's report. Do you have anything, Scott?
Yeah, we're
Careful,
efforting a
Amanda. Safe
request
travels.
here.
Thank you very much.
The CAT Sapper audit contract currently goes through 2018. Vicki's requesting, since I think our next meeting is May,
Mm-hmm.
Vicki's requesting, and she's efforting the number as we speak, I believe. If the foundation would consider extending the SAP Miller, or the CAT SAP Miller audit contract through 2019, to get that started, and she's looking for the number on what that would cost. And she's requesting it because of the timing between this meeting and the May meeting.
And we're already using them.
They're currently finishing up our 18 as we speak.
There's no change.
You waiting on something?
Waiting on the number. from
Okay.
Vicki.
Right.
Thought I was tone deaf there for a minute. Did you say something? Yeah, right. Okay, they're working.
Probably between $8,000 and $10,000, $8,000 and $12,000, because the first invoices came to just over $20,000 in 2 years of
Oh,
an audit. We did the 2016-17, the 2018 is well underway, and I expect it to be wrapped up relatively soon.
And now they've done it a few times.
That might be a little
It'll be
bit
easier
less.
to find
Again.
everything. So,
And the price keeps going down because Vicki,
Right.
the auditor's
Work.
office keeps doing more work, and they
Right.
know it better.
yep.
so what would a motion need to look like?
To authorize the extension of the contract. And then you can formalize it at the May meeting, because we probably wouldn't finish it completely by May.
So do we need a motion tonight?
I would
I'm waiting on
We're
the
gonna finish it.
attorneys down there.
Doing it without a dollar amount,
I mean, we can do it
Well,
up
not
to.
to exceed. Yeah, we could do it
Yeah.
not to exceed. I was thinking making it 12 grand, or 10 grand, 12 grand not to exceed.
Good idea.
I like that idea.
Yeah, it's a
There's
good
a
idea.
motion to approve CAT Sapper through 2019 audit with a not to exceed 10,000. I think that would get us there.
you said 10,000? That's what it,
I said 210, and
That's
if we need
fine.
to update it in May, we can.
Yeah, that's true. At least you got
Okay.
something.
They can get working on it and then get back to us.
Do I have a motion?
So moved. Second.
Okay, all those in favor signify by saying aye.
Aye.
All opposed, same sign. Motion carries. Anything else, Scott?
No.
All right. Any other matters that come before the board?
what's the approval of plans?
Oh, yeah, we have one claim of
Good
Capital
catch.
Cities for their quarterly
Oh, right
payment.
in front of me. Well, it's the next thing.
Wasn't trying to go home.
Approval of claims. Okay. Got it. everybody a chance to look at that? Need a motion. The approval of claims.
Yeah, we always,
It's $16,250.
That's why she was being so nice.
so moved.
Second.
Got a motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion carries. All right. I guess that's meeting adjourned. See you next